What's up everyone, it's Karthik with MoneyVest. So in this video, we are going to be talking about Tesla stock, and I've done a lot of videos like these where we need to sit down and talk about a specific company, and reason being is because in that moment that stock is selling off. I've done these videos on Meta platforms, I've done these videos on Palantir, I've done these videos on Nvidia even to some extent, and we have done this video on Tesla and even PayPal. PayPal is now starting to move higher, but I really figured I'd do a video on Tesla and sit down and talk to you guys like a friend, and what I believe is really critical and important information to get across, especially if you're just getting started with investing, right? Some of the more mature, experienced investors probably already understand this piece, but some of the newer investors certainly get trapped in this mindset of following the crowd or really just following Wall Street, which is, in my opinion, even worse. So hope you all enjoy this video and find it helpful. Make sure that you drop a like and subscribe to the channel, and do me a favor and share this video with your friends and family, other investors and traders that can benefit from this information and the value here. Especially, this is going to be very important for all Tesla investors and traders as well. So first things first, in my previous Tesla live stream, there was a comment from one of the users, James123boy, essentially said that you can't compare Tesla to Apple, pun intended. One shows the numbers and the details to the max, other is potential speculation with no time frame on delivery. So the reason why there is some factual incorrectness in this comment is because I was comparing Apple's marketing events, which is where they show their products, right? So we have the unveiling of the new iPhone and the new MacBooks and the new watches, with Tesla's event of unveiling the new products. Now, the only difference is that the new products that Apple displays and unveils are ready now for pre-order, right? So the new iPhone 16 comes out, you can go out there and start ordering that on a pre-order basis, and it's going to get delivered to you once it's launched within a few weeks. With Tesla, they're unveiling these products, but of course you can't right now buy the Optimus robot, or you can't buy the Cybercab, you can't buy the Robovan, right? So it's at least a couple of years out. So it's not about the details that mattered, because Tesla, when they're reporting their earnings, they're reporting their details, right? They're coming out with their details and numbers to the max. And Apple, I would argue, has not provided us with any guidance since COVID began. So that again is why I believe that both companies in different circumstances provide us the details and the marketing. The problem is not the details or the lack of details, because that was never the question. That was never what this event was meant for, right? We never expected, I don't know why investors on Wall Street expected that Tesla's going to come out and instead of unveiling the robotaxi, they're going to unveil a spreadsheet. Like, that was never part of the process. They were never going to unveil a spreadsheet where everybody's going to like, wow, these are the numbers? Like, oh my God, profit $15 a share? Like, that was never going to be the case. Like, they were never meant to unveil a spreadsheet, folks. So that is the real concern here. It was not about the details, but it was really about the timeline of delivery where the problem occurs. And unfortunately, I want to save one person, because this person essentially commented, correct, I learned recently how I want to invest, basically thinking like Wall Street. Oh my God. Like, I responded to this person, but if you're listening, I really want to, tell you as a friend that thinking like Wall Street is going to make you very short-sighted. It's going to make you lose out on a lot of potential opportunities. And it's also going to put you in this rat race of every year beating the S&P 500. So you don't want to do that. You don't want to be thinking like Wall Street, because Wall Street, as we know, is very, very short-sighted. They really want to see the numbers today. They really want to see the numbers and the profits and the revenues and how is this going to materialize today in the next couple of quarters, because that is all they care about. And unfortunately, they're also the most important piece to the entire puzzle, because they're the ones that are the big money and they're the ones that actually move the stock. If there's big money moving into a company, obviously we're going to see a lot of momentum, a lot of surgence in the price, and vice versa. If there's big money dumping that stock, as we saw with Tesla on Friday, then that's what's going to happen, is the stock price is going to absolutely collapse. Tesla losing out on $70 billion in market cap, or almost down to almost 9%. Now, I really want to give you some examples, because there was another comment from another user talking about how Nvidia, has gone through over a 300,000% increase, and so Nvidia has delivered versus Tesla has not. But that again is somewhat incorrect in the way you're thinking about things. So this is a very, very good example, and I think the best case study I can give you as to why not think about Wall Street is Palantir. We're all aware of Palantir, right? We all understand what Palantir is. Palantir is a company, in data science and artificial intelligence, right? Using data to essentially help companies. So it's a B2B company, is winning contracts left and right for both government and commercial. And look at the entire price action for Palantir. And this is what Wall Street does. This is perhaps the best example I can give you, okay? Now, we have to understand that the stock price and the company are two very different things, right? The company could be making big leaps on product development, big leaps on the actual refinement and iterations of their technological advancements. But until that actually materializes into the company's numbers, none of that's going to materialize into the stock price. The stock price trades on momentum, perceived value, right? That's a big thing. It's a perception of that value creation that drives the stock price. And until all the story things, all the things that we're talking about based on story translate over into the company's actual numbers, it's not going to work out. It's not going to happen. And that's what happened with Palantir for the longest time. I mean, take a look at Palantir, doing their, DPO back in 2020, initial spike of almost 400%, and then absolutely got crushed, 86%. And you know what? If you come over to essentially this, you'll notice that Palantir did not go anywhere since 2022 all the way to 2023. So this right here was an entire year, right? A little over a year where Palantir did not go anywhere from January 22 all the way to September 23. So this was well over 18, almost 20 months. Palantir really consolidated sideways in that range of between like $6 to as much as $13. So it was really just kind of bouncing around before finally Wall Street woke up and realized that this is a company that's going to change the world. And it's worth investing in. And as a result, we've seen Wall Street essentially gotten very, very, very bullish on this company over the last 3 to 6 months. And you've seen the stock price rally another 200%. S&P 500 inclusion comes in, and just absolutely everyone just goes crazy. Everyone just goes berserk, and this becomes an overcrowded trade. Now, if I come over to something like an Nvidia, right, and if you take a look at how Nvidia's traded in the past, for the longest time, Nvidia's also gone through many, many years of underperformance. And this is what I'm trying to also help you understand, is that no stock, no company that you'll ever find has had every single year successful, every single year of outperformance, every single year being very, very incredible. If you're simply looking at point A and point B, yes, you can make a conclusion that, oh, this stock went up 300,000%, hence it's the best company in the world. Palantir went up 500%, hence it's an amazing company to be investing in. But you also have to understand how much time and how much patience it took for investors to wait until they finally blew up, because they deserved to, because they really deserved to blow up, because the potential was always there. Wall Street and investors were just ignorant of seeing that potential. So you can see how Nvidia, this right here was the peak of 2011, drops a little bit over 58%, and then it stays there. It doesn't really take out above its 2011, let alone the 2007 high until 2016. So we're talking 5 to as many as 7 years, 5 to 7 years of no performance from Nvidia. It's still not taken out its previous high. I mean, from 2007 all the way down to 2015, down over 40%. Even if you don't account for the great financial crisis back in 07-08, let's just look at 2011, right? 2011, it was trading as much as 60 cents. This is, of course, on a split adjusted basis. And you go all the way fast forward to 2016. So it's 5 years. 5 years. It took 5 years for Nvidia to finally recover. And of course, this right here was the parabolic run-up all the way to new all-time highs at over $7. And then this right here, once again, another sell-off of over 57%. So this right here was back there, 2018 high of well over $6-7 per share. Of course, it drops a little bit over 58%, and it doesn't break out above this level since 2020. So 2 full years of underperformance from Nvidia, essentially trading below its all-time highs. And of course, Amazon has gone through this cycle. Apple has gone through this cycle. Another really, really big stock is Microsoft. You'll be surprised to learn that Microsoft, once it was selling off from its 2007-2008 high, even even the dot-com bubble high of well over $36, it took Amazon well over 15, 16 years to finally trade back above its all-time highs. And this right here was, just an incredible amount of consolidation. I mean, think about it, right? 13 years. 13 years. Investors could have ruled out this stock in 13 years, where the stock literally went nowhere. Nowhere. 13 years we're talking, right? So people who bought here at $15, $16, 13 years later, they're only up like 50% or 60%, or let alone people who bought in the $20, $22 per share range right about there in 2001, even 12, 13 years later, they have nothing to show for it. So the stock price and the company are two very different things. And the company could be making leaps. The company could be improving their product. The company could be doing a lot of really wonderful things. And the stock price would still not realize the full potential until after it materializes. So unfortunately, as I've always mentioned, there is always this huge disconnect where Wall Street is short-sighted. They are looking at the next couple quarters. What kind of numbers can this generate? And the expectations were very different. I'm not going to say the expectations were high, but they were very different. And I was thinking about this, earlier in the morning, is that of course you're going to get disappointed if you walk into an ice cream shop looking for a lemonade, right? And that's really what ended up happening, right? You were going into this event with different expectations for what it's going to be, but it was never supposed to be the unveiling of the data. It wasn't supposed to be the unveiling of the specifics or unveiling of the business unit economics or unveiling of the profitability. It was supposed to be unveiling of the product. And in my opinion, I think the product was fantastic. And speaking of the product, this right here is a video that I shared with everyone in our Discord. Essentially said, for all Tesla investors, here is the FSD update 13 is due at the end of this month, so end of October. But this is a fantastic review of the current state of the full self-driving. This is 12.5.6. This is almost a 30-minute video that I highly recommend that everybody watches if you are a Tesla investor. And even if you're not a Tesla investor, just watch this video to better understand how far Tesla has come with regards to full self-driving. They've almost solved it to a point where it is going to be unsupervised next year. So Tesla AI finally drives on highways, first impression by AI driver. And these are my notes. And I'm also going to go over the bad and the good, because it's not perfect. No technology, no piece of technology is ever going to be perfect in the beginning. So some of the takeaways in terms of cons first is that, of course, that person drove 2 hours, that's 100 miles, and this is going to be the end-to-end network for highways and end-to-end network for street driving. A lot of driving in that video, so street and highways. So in total, three was the number for one critical disengagement of the FSD, one intervention, and one non-critical disengagement. And I saw all of them in the video. The first one was that it did not slow down for a bump in the road. Tesla AI right now is still unsure of how it characterizes bumps. And for the first one, it slowed down a little bit, but for the second one, it did not. And for the third one, the person had to intervene to slow the car manually so that it doesn't kind of make you feel uncomfortable. So that was the only critical disengagement in that entire video, is speed bumps. One intervention was not adjusting the speed on the highway, so driving 42 miles per hour. So speed right now is still under very much question. Sometimes it's perfect, sometimes it's a little bit slower, because Tesla AI has been sort of trained to have a very defensive style of driving. So it's a defensive driving methodology where you want to be as safe as possible, but it's also going to be more human-like. And that's what that person in that video, AI driver, essentially mentioned. And the only non-critical disengagement was switching to reverse in a dead roundabout. So after approaching to that location, there was a dead roundabout, and that roundabout, it did not kind of anticipate the radius, and when it was turning the vehicle, it kind of came up to a curb, and so it had to reverse the car to move out of that roundabout. But since it was at a curb, it wasn't able to switch to reverse. I think that's not available in this update, and that's why the person had to disengage. AI put it in reverse, go back, and then put it back into FSD to drive out. So those are the only three events where I witnessed disengagement and interventions, and some other really critical things which Tesla was notified about, was not able to identify the drop location. So it was kind of funny that when the person arrived at the drop location, instead of stopping, the FSD continued to go in loop. It can continue to go in circles without even dropping at the drop location. So that was something that was a bit of a concern. And then not switching lanes sooner. So switching lanes at just under 100 meters before the turn. So instead of getting in that lane for whatever turn it's about to make, it was actually doing it, kind of at the last minute, still not last minute, still 100 meters before the turn. But that, driver mentioned that he wished in some circumstances it was doing it a little bit sooner to get into that lane sooner, right? Because at the end, it becomes a little bit more of a hassle and very awkward if there's person, driving right in the blind spot and coming up to you. So that was the only events where the AI felt like there were some more improvements needed, and taking time to get up to max speed. So max speed, of course, was also listed at the very bottom. However, there was a lot of things to be happy about. Perfect lane changes, apart from the lane changing sooner to turn into a different spot. But other than that, perfect lane changes, blinkers on, and continuing with the flow of the traffic, keeping perfect distance with the cars around you, in front of you, behind you, perfect awareness of the blind spots, perfect awareness of nearby surroundings and oncoming traffic. All in all, very solid improvements is what that person mentioned. Feels very smooth and human-like. This feels like the last piece of the puzzle in version 12, which had end-to-end city streets, smart summon end-to-end for parking lots, which essentially got universal praise. And now we've also got end-to-end on highway, and AI has slowly eaten through the manually written code, and it's now very smooth and significantly safer. And the bottom line was that it was very, very human-like. It was actually driving like a human, because you need AI drivers to drive like humans, to be among humans. So that was a lot of really good takeaways from that entire video, which I highly encourage everyone to watch. It was actually very, very insightful to kind of watch this 30-minute video of full self-driving, for Tesla. So highly encourage you to check it out if you haven't already. But the bottom line is that focus on the company. Now, as I mentioned before, my Tesla fair value is still in the 150s and 170s. I do believe that Tesla, trading just purely on an electric vehicle standpoint, trades at a very, very expensive multiple. But this video is only meant for this particular event where the expectations were different. Tesla did not disappoint. Tesla, in fact, released a lot of really amazing products, and it's making a lot of leaps in the product development phase. It's just expectations were very different from Wall Street. They were expecting details and specifics and something in the near future, which obviously we knew that we weren't going to get. Tesla, FSD, Cybercab, robotaxis, they're still some years away. And so patience is going to play a huge role if you are really investing in this company for this over the long term. I'm mostly focused on the electric vehicle business, and all of this is like a cherry on top. And if it gets up to deployment, and if it gets to very, very significant, adoption and execution, then of course Tesla's valuation can increase over time. But that's the whole idea. That's what I wanted to discuss in this video. Hope you all enjoyed this video, but please don't start thinking like Wall Street, because I mentioned this in the comments as well in the reply, that unless you want subpar returns, please do not think like Wall Street, because they are the ones playing catch up towards the end, once the company has fully commercialized their actual revenues and earnings and whatnot. And again, it's been materialized significantly right onto the numbers. But if you are studying the story, if you're understanding the product and how that's going to eventually make its way over to the revenues and monetization and earnings, then that's an opportunity that you can evaluate yourself and better figure out whether it's worth looking into from a long-term perspective. I think retail has that flexibility and that liberty to think long-term, because we're not on a clock. We don't have a lot of board members on our back to perform better than the S&P 500. We're not trading with anyone else's money, so we've got a lot of flexibility. These are really our edge, right? Where we can think long term, we can invest long term, and we don't have to worry about what happens quarter over quarter. Yes, we have to revisit that story, but as long as the company is delivering on the product as well as the numbers, the story remains intact. So hope you all enjoyed this video, found it helpful. Make sure that you drop a like and subscribe to the channel. And as always, happy investing. I'll see you all in the next video.